Well, I am bearish commercial real estate for many reasons. Office buildings are empty, malls are going empty, brick and mortar is getting killed. People are not going back to work like they maybe thought they would after COVID. Working at home is pretty cozy, as you can see. So here's my story. This is my theory, and that is I'm bearish on commercial real estate. And what I always try to tell people is that's great. You can have a theory, you can have a story, but does your chart confirm your story? Do the technicals confirm what you think is going to happen? And in this case, I'm going to start with the ETF IYR. It's the iShares US Real Estate Fund. As you can see here, plenty of volume, 9 million shares traded so far today, plenty of liquidity. It basically mirrors the real estate brokers, the real estate investment trusts, and other publicly traded exposures on the stock market to real estate and primarily commercial real estate, office buildings, malls, what have you. Excluding apartment buildings, that's a whole different story, especially here in San Diego. You know, you could make a case. I have an office park just down around the corner with probably 10 buildings, and most of them are barely half full. It'd be a wonderful zoning endeavor to rezone that entire business park into apartments or, smaller living for more affordable living, I should say. But back to the charts. Does the chart confirm the story? Yes, it does. And I'm going to say this is the reason why. This is the 20 SMA, the 50 SMA, and the 10. They're all converging right here. And what I call this essentially is like an armpit, or it's almost like a basketball player with his hand palmed over the ball, getting ready to bounce it, or an armpit, if you will. The point is there's tremendous amount of headwinds, technically speaking, with the moving averages, the 10, the 20, and the 50 in this case. There's a triple wall, and it's very difficult to get price action to push back up through that wall. As you can see back here, there was a wonderful trend following the 10 SMA, and you can see why I like the 10 SMA until it fails. And when it fails, everything just kind of goes crazy. Um, but what I wanted to do is focus on how you can get leverage on once you've established your story. How do you participate in the trade? What vehicle do you use? Yes, you could short IYR, but there's better ways if you have just a simple account, that allows you even a 401k or a long only IRA account. I looked up and Googled, the inverse ETF for IYR, and I found SRS. So let's take a look at SRS. Not a lot of liquidity, but it will still mirror the exact opposite, the exact inverse of what's happening over in IYR. So we can see over here, as the IYR ETF was doing well, the inverse was going down, but doing it twice as fast. So you can make money twice as fast, you can lose money twice as fast with these levered ETFs. So the point being is I took a position here around below 16 today, and I'm going to try and hold on to it. And I think there's some possibility that as long as the IYR stays in that armpit or under the hand holding the basketball, if you will, this could give some short-term run, and that's what I'm basically looking for. You can see on this monthly chart over here in the thumbnail, it's kind of at the low end of its range. So we've got all these different time frames we can look at. And that's the theory. That's the chart confirming my story. And hope that was valuable to you.